Hi everyone. Today I want to show you how to trade breakouts out of very strong trends and chart patterns. And I'm going to show some great tips for doing that, different ways to play these breakouts, and show you how you can do it while having a full-time job. Okay, we cater to people who want to make money in the market trading, but they don't want to watch stocks, bounce around all day and all the noise that goes on throughout the market day, and who want to but still want to profit from trading setups that come along that are in many cases very profitable. I'm going to show you how to do that in this video, and I'm going to show you an example from our subscription site. This is Graham, as I'm going to call it, featured back in late February 2016, and I'm going to show you this bull flag breakout. In a prior video I talked about the bull flag pattern and how a lot of people consider this to be the most bullish chart pattern, and we've actually found that to be the case in our own trading. I'm going to show you this pattern and show you how we enter and exit the trades and different options for doing that. And again, this is just Graham. This is a bull flag pattern. If you haven't seen the prior videos, a bull flag pattern, as I'm using the term here, is when a stock goes up 90% or more within a couple months and then moves sideways or sideways and lower, in this case, to form the flag portion of the pattern. So you've got this flag, this big move up that forms the flagpole, and then you've got this nice consolidation going off to the right here that forms the flag. In some cases that's rectangular, in other cases it's more of a pennant shape, triangular pennant shaped. Okay, so now the target entry on this pattern is either a break above the short-term downtrend formed in the flag, or a move above the highs of the flag. Okay, now again, this is a very bullish chart pattern, and you can make a lot of money on these patterns. You want to have a stop, you want to have a good plan for playing the breakout, and I'm going to show you how we do that here in our own trading and how we teach our customers on our site. So okay, so now when you click the chart on our subscription site, the latest chart comes up with our trend lines already drawn for you. Okay, and that makes it really easy to spot these entry points. Okay, so we can see here at the beginning of March, you can just see that hopefully in this video, where around the beginning of March the stock closes above the short-term downtrend. Now I'm going to zoom in on this a little bit with my browser so I can make sure that you can see that, but you can see here this candle right in here closes above this short-term downtrend line. Okay, so with our methodology, the target entry is the open the next day. Okay, and what that really means is that you put a market order in for the next morning, and in some cases that entry point is above the prior day's close. Sometimes it's a little below. Now in this case we got a break, we got a lower open, so that market order was filled at a lower price than the prior close. Okay, so that entry price was around 355, 360. What we do at that point is put what's called an OCO order in. One cancels the other, and basically that's a limit order for your target sell price and a stop loss order wrapped up into one order. Okay, so in this case, I think our target was 428, 429. The stop was just below the flag, I think just below 350. Let me double check that here, so I've got that right. Yeah, stop loss was 349, so just below the 350. Okay, so you enter that OCO order after you enter the trade. Okay, it made a big 15-20% move within 2-3 days, and you often see those kind of moves out of this pattern, especially when you have a very strong volume leading into it and some volume on the breakout. Now in this case, the price didn't quite reach its target sell price, but it came very close to it within a few days. Okay, so in this case, what you can do is you can pick out a recent resistance area. In this case, it's $4. Now this was support way back here in August of last year. You can see that held at $4 level, held as support, and then the price later went on below that and then started to surge from the bottom here back up into that resistance. Now that support, my point is that support later becomes resistance, and that was the case here. And that's true for a lot of these stocks and a lot of our setups. As the price was being rejected just below our sell price, you could have put a target or dropped that target sell price to right around $4, just below $4, like $3.99, $3.98, to be safe, and gotten out of the trade with or half of your position at that point. Okay, if you would have done that, that would have worked out real nice. We had a second target mentioned in the newsletter back in when we featured the stock of 550, so you could have kept half where you stopped it just below the entry point and went for that target of 550, and that would have worked out real nice for us. All right, so that's one way of playing this chart pattern. And I want to tell you about the other way though, and that's the close above the high in the flag. Okay, and we can see here that the price goes above the high in the flag. Now what you can do is you can either wait for a close above the flagpole, or you can put a buy stop order just above the high in the flagpole. So if you would put a buy stop order just above the high here, okay, that would have been filled over in here in this candle, and it wouldn't have worked. Okay, so it would have hit that buy stop, filled, and then it pulled back that day. Okay, so if you do use a buy stop order, what we like to do is go ahead and put a stop loss about 3.5% below the entry point. Okay, and again, that would have caused a loss in this case about 3.5%. All right, so that's frustrating because later it actually took off after it hit the 50-day moving average, found support there, and took off over the next few days. Okay, so another good entry point in these cases where you miss that big move, where it closes above the flagpole. Another thing you can do is go ahead and put a buy stop above that high after the breakout. So in this case, it was around 520, I believe, 521. Put a buy stop order for the next trading day, okay, and then see if it continued higher. Now, very often when you get these very explosive breakouts with very, very strong volume, you often get a secondary move the next day, okay, and you can put a stop order, like I said, buy stop order just above the prior day's high, all right? And then go for a target of a nearby resistance area. Okay, now there was a resistance around 550, and that was our second target from the original trade, which was filled. Now, with this kind of breakout, what we often do, if the volume is this strong and the move out of the pattern is this strong, all this volume and this big price move, okay, and we close pretty close to the highs for the day, we'll often cancel that order and just see how it plays out. Just let it, surge from there and see if it goes well above that, and look at the next level of resistance. Okay, and there's also resistance level up here close to $7, $6.75 to $7. And with that kind of breakout, the stock has a good chance of reaching that area. Okay, so you could put a limit order in for 674, 673, or 698, or just wait for some kind of move or some kind of pattern on a 10-minute chart. There's different ways of playing it at that point, but you definitely want to put a limit order in most cases for your target sell price. But that's a second way of playing this pattern if you're playing the break above the highs. Now, the first trade fails, okay, with that tight stop loss. The second trade, now oftentimes when you have this turnover, the stock will continue to move lower. Okay, so you got to be careful of that. That's why you want to play with a tight stop. But even if you failed in that first breakout, okay, the stock comes back, has that huge breakout here, and closes well above the flagpole, there's still another trade there that you can take part in most cases. Because it has a huge volume, 10 times the average volume, and it goes up so much that day of the breakout, it closes pretty close to the highs. That tells you that there's another trade there, okay? And I just want to point that out. This is a very bullish bull flag pattern. Okay, so this is trading a bull flag pattern. Now, if it's a stock that moves out of a flat base and it doesn't make these kind of moves normally, and it breaks out on pretty modest volume, maybe 50% or 100% more than the average volume, that's a totally different trade, and that may or may not work. But when it has this huge move, 5, 10, 15, 20% or more above the entry point, closes near the highs, you have a secondary move very often the next day, and that you can take advantage of. So with a tight stop loss, okay? And that tight stop loss would have worked in this case as well for a nice, 10, 15, 20% gain. Who knows how far this will go, okay, with this kind of volume pushing it up versus the average volume. So, okay, so I just want to go over the breakout of the bull flag pattern and talk about different ways of playing that. Hopefully you learned something from this video. And this is a very bullish pattern. You want to have this on your radar. Okay, now a lot of people don't want to, one thing I want to mention too is that some people don't want to hold on this long for this breakout because they've seen so many cases where the stock turns over. Well, with most penny stocks, that's the case. Now we feature and we trade in our own trading stocks that have very rapidly improving fundamentals. The company's beating their estimates. Okay, they have rising future expectations, or they're a very strong growth stock. Okay, if you pick the right stock to begin with, if it goes into this pattern, you can hold on to the stock longer. Now, with most penny stocks, you don't want to do that. Okay, because most penny stocks are hype. Mostly hype, mostly pump and dump, and that stock will turn over, within a few days. Okay, so it depends on what type of stock you're trading. If the stock has real results and real fundamentals behind the move and deserves a higher price, then you can hold on longer and let the trade resolve to the upside. And that's what we did here. So, and those are the type of stocks that we feature to our customers, that we trade in our own accounts. And if you can combine these rapidly improving fundamentals with these very strong technical patterns, you often have these big winners. Okay, and that's what we teach on our site, and that's the kind of stocks that we trade in our own accounts, and these are the kind of setups that we look for, where you don't have to worry about as much about the stock moving over, turning over very hard within a day or two. And I'm sure many of you out there are really concerned about holding a stock at these price levels for a few days, because in your own experience that they often turn over very hard. So we do things a little bit differently. We look for different kinds of stocks and look for those very bullish setups on the stocks that can hold these levels, because the underlying fundamentals are there to hold these levels. Okay, and so I just wanted to mention that, and hopefully make you realize that there's a better way. All right, that's about it. Subscribe to our YouTube channel. There's a subscribe button down below next to my headshot, and you'll get the latest videos when released, and there's a lot more valuable tips out there. Check out our other videos on our YouTube channel, and also if you haven't taken our free trial yet, you can see other trading setups like this sent to you and on our subscription site. So just go to our site. There's a link below. Just click the down arrow below and you'll see the link to sign up for our free trial. There's no credit card required for that, just your name and email, and we'll send you other great trading setups. And you can also see all of our trading setups featured over the past few years and see how well these perform over time. Just click the chart within the newsletter. You can see how well each stock performed after it was featured on the site. Okay, and I also want to mention we're members of the Better Business Bureau. We have an A+ rating with them, and we've been members there since 2006. And also, we also sell a book on our site where we cover different swing trading setups, not the bull flag pattern so much, but other swing trading setups. And if there's a bull flag pattern within that swing trading setup, you can find those as well within a longer term uptrend. It goes over many of our swing trading methods in detail, and you can learn a lot from that book. So you can download that on our website. We also have a blog that gives you great tips as well. So, okay, that about wraps it up. If you like the video, go ahead and like it down below. If you have any questions, go and leave them in the comments section down below, or email us at info@Tradetobefree.com. You'll see that email on our website. All right, have a great day, and we'll talk to you again real soon.